start off with the Kiwi dollar and the knee-jerk reaction. Now, is it a knee-jerk reaction, or the interest rate expectations that have been set makes the market believe that there is more yield opportunity in the currency right now?
Yeah, I think it is the latter. I can't really fault the market for moving like this. This was a surprisingly hawkish outcome. I mean, everywhere across the world, if central banks aren't cutting, they're certainly thinking about it. And here's the RBNZ saying, can't see it on the horizon for the next year. So it is a bit unusual. Look, I think that's got to change as the year goes on. I see what the RBNZ's worried about. Inflation is a little bit sticky there. Wages haven't come down quite as much. What I'd say, though, is at least they're coming down, whether it's CPI inflation or wage inflation. And meanwhile, New Zealand is in recession. And, it's no small feat to be in recession when you've got 3% population growth. So actually, in per person terms, it's a huge recession. So there are a lot of central bank governors that would say, you know what, inflation's not coming down quite as much as we hope, but the economy's so bad, that'll prove disinflationary. The RBNZ's not of that mindset. They're as inflation-focused as it comes, and it looks like they want to stay with tight policy until they see that disinflation gather a bit more pace. Now, that's interesting for Kiwi dollar, because if there's one thing that's positive for Kiwi dollar, it's that they offer the highest 10-year bond yield in G10, and you're seeing that foreign debt buying every month chip away. Foreigners are buying. Once the RBNZ turns dovishly, and I think that'll happen in the third quarter, then it'll unwind. But for right now, too bad what growth's doing. The RBNZ's still very worried about inflation.
Indeed. And so what's the trajectory looking like for the Kiwi dollar from here?
I'm bearish because I think that pivot has to come through. And I think these are good entry levels for buying Aussie Kiwi, for example, or selling Kiwi versus the big dollar, because I think that is going to come. It's a matter of time. You've got food inflation, it's already back to normal. We had inflation expectations. The Reserve Bank of New Zealand survey last week was a little bit lower too. So, there are indicators that suggest things will slow down. And, an economic downturn of this magnitude also carries those disinflationary impacts. So I think this pop is definitely worth selling in Kiwi. They just can't sustain this pace. And if the RBNZ is going to pivot dovishly, like I think in the third quarter, foreigners buy less of that debt, as I mentioned. There's nothing else in the current account that speaks well for Kiwi. It's a very big trade deficit. It's a very big current account deficit. As much as tourists are returning back to New Zealand, New Zealanders themselves are even more likely to be doing tourism overseas, leaving overseas. So even the services trade balance is still in deficit, not the surplus we're accustomed to. So there's just nothing really that excites me about Kiwi dollar once they lose that yield advantage, and I think they're on borrowed time.